Stock markets in Europe are trading broadly flat this morning, with the UK's FTSE 100 index currently up about 7 points, while the Euro Stoxx 50 index is higher by just 5 points. The DAX in Germany is doing a little better, up about 18 points at the moment. In the currency space, most FX pairs are currently calm, very subdued in the FX space, I must add. And when it comes to other asset classes, such as commodity prices, gold is down about $18. Oil prices continue to retreat, and when it comes to the bond space, currently UK gilts and German bunds are in favour, with German bunds up about 45 ticks. And finally, with peripheral bond yields, they are behaving themselves. Italian and Spanish and Portuguese bond yields are currently all calm. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market buy. I'm going to give you a quick idea of what's going on in financial markets today. So we had a positive session on Wall Street overnight. Good gains for US markets. It was on the back of a better tone over the global economy, receding fears over US intervention in Syria after the US and Russia opted for diplomacy to disarm the Assad regime of chemicals, which is something now the market is looking out for, as these negotiations are going over to the UN for some sort of further development where both countries can find a common ground, both countries meaning the US and Russia in this case, to finally resolve the matter and not use brute military force from the US side. Now, when it comes to some of the overnight moves, we had a broadly dull session in Asia. Most Asian markets were flat to soft, giving us no real clear direction for the European session. So we are starting off pretty range bound with no real kind of inspiration going into the rest of the session. We've got a number of economic data points to look out for, most notably industrial production out from the Eurozone, and we also have some data out from the US weekly jobless claims, which will be very much awaited by the market, given the fact that the labour market in the US is in key focus, as it will essentially decide the fate of quantitative easing by the Federal Reserve. Are we going to see some sort of tapering this month, or are we going to have to wait for a little longer? Now, the big focus in the UK today will be, of course, Bank of England Governor Carney's speech at the Treasury Select Committee. Now, more so than ever, it's going to be based around the fact that yesterday we saw a surprise drop in the unemployment rate to 7.7%. From 7.8% in the UK jobs data that was out. Now, we know that recently the Bank of England have put out this forward guidance measure, and one of the thresholds in this forward guidance measure is, of course, that if the unemployment rate dips below 7%, which the Bank of England expects by 2016, or roughly around late 2016, then they will start hiking interest rates. So they've given us this 3-year period where they aren't going to do anything to interest rates, not until at least the unemployment rate falls below 7%. Very similar to the Federal Reserve, who've done the same thing when it comes to tightening monetary policies and tapering quantitative easing. So today, investors are going to be looking out for any sort of fresh details on where the Bank of England, how the Bank of England sees the current pace of the UK economic recovery. Interestingly, we've seen a big rise in UK Treasury, UK 10-year gilts. Now the 10-year is up, is extremely elevated, above the 3% mark in recent days. That's the highest level since around July 2011, and that's on the back of the fact that the gilt yield is pricing in a rate hike a lot quicker than the Bank of England expected. There's a lot of concern in the market that the forward guidance measure put out by the Bank of England is somewhat unconvincing, that people just don't believe that Mark Carney can actually keep a lid on rising interest rates until 2016, because most people feel that the UK recovery is going at a good pace and could accelerate quite rapidly in the year ahead. So that's something to watch out for. Other than that, not much else to say. So we're probably going to be quite a subdued session with a lot of with a lot of tensions around Syria still kind of keeping some of that upside momentum on the downside, hampering some of those moves that we are seeing at the moment, and also at the same time the Fed tapering narrative is also kind of kicking about. So there is a lot to keep our attention on, and really just go forward to the end of the session next week. Not next week, sorry. The Friday session, which will be the end of the session, end of this week's trading day, with more economic data, particularly the Michigan confidence numbers. Anyway, that's all for your daily market. But tune in tomorrow for another one. Cheers.